Good morning, good afternoon, good evening. Welcome to the post analysis of the trade we took last week. Um, I had six trade opportunities or setups. This is one of them that gave me plus one. This is another one plus one. This is another one here during the Asian session plus one. This is another one here plus one. This is a swing trade plus one. All of them percentage. This is a day trade plus one. Okay. 1, 2, 3, 4, 5, 6. 6% last week. When I mean 6%, I mean 6 trades, 6 wins. Okay. So the win rate for last week was 100% win rate. Okay. That's because different things were infused into the trading. One thing, first of all, is my risk management. What is my tolerance to risk? Second thing is my trading strategy. The third is the trading psychology or market psychology. Okay. Understanding that if this is a car moving at a high speed, once it reaches a junction, it is expected for the car to do what? Slow down. Now, once a car gets to a curvature, let's say a car wants to turn around at a particular junction. For every experienced driver, there is something that is in our brains. You do it automatically. No one has to tell you. If you're moving in a straight line, you're automatically moving at a steady or increasing speed. By the time you get to curved lines, which automatically happens subconsciously, once you notice that you are subconsciously curving, what happens? Subconsciously, you notice yourself, in physics, we call it retardation or decelerating. You are reducing in the speed at which you are traveling. Okay, and that thing occurs most times before a U curve, somewhere around here. And this particular spot you see is where someone will say retardation is equal to what? 100%. What does it mean retardation is equal to 100%? That means that you have completely decelerated at this point, and this is another short time rally where you can increase, but most times people just run at a constant speed because they're anticipating what? Another phase of deceleration before continuing strongly. So now infuse this into this. This is the phase. So 0 to A is the phase where you are at your highest speed. A to B is the phase where you are curving down. B to C is a phase where you notice that price wants to start turning around. Okay, but this C to D, this is where most people lose their trades because they want to enter at this spot, not waiting for price to meet what? The criteria. What if price gets to this spot and does what? Drop down and continue its bearish momentum. So what happens between here to here will be where most traders will say, oh, this is early entry, EE. This is late entry. Anything after this DE, anything after this where E is equal to O is equal to late entry. Anything before D is equal to early entry. If someone enters around here, they're entering speculatively because they are not sure price will go up. They are just hopeful that price will go up because technically you cannot say because you're seeing weakness from the buyers here, price will continue going up. What if the weakness here is because of the time of the day? For instance, if this was New York Open or London Open or Asian Open, you don't expect that if you see this, that means that they are disinterested. Okay, if this was during the Asian session where price is normally slow, or during the blip between um, Asian close and pre-London, this could be the blip where price will just be moving slowly because traders have gone out of their trading desk. This could be the reason for this rally because price wants to come to a fair value before dropping. So in other words, technically, best buy positions could occur where there is a what change in character. It could be from this port, it could be from this port, it could be from this port, but a safe buy for me was from this port for price to continue its bullish rally. So that's where I took my buys here with stop loss below the structure. Another buy here with stop loss below the structure. Now this is a little advanced than the way I'm putting it, but I'm trying to make this video simple and sweet. So the concept, the general concept is understanding this velocity change from constant or increasing velocity to slowing of velocity to another fixed phase of velocity, which is here, to another slowing velocity to an increasing velocity. Okay, so this is where most traders want to catch. This is what I'm talking about. This is where most traders want to catch here. You see that the velocity here increased compared to this side. So if you are to gauge momentum, the velocity here and here can't be the same because at this point, everyone knows obviously that buyers are in the market. But at this point, this is where the big boys, institutional traders, big banks are loading their buy positions. But the retail traders may not see these buy positions. This is where the retail traders are convinced anywhere above here that the buyers are into the market. So this is what I took for my British pound Japanese yen. Yeah, the explanation was a little deep, but if you can wait through, scale through it, that would be an added advantage to you as a trader. Okay, so this is just a snippet of how I look at the market. Okay, so at the moment on British pound Japanese yen, we are in a ranging market structure where this is resistance 1, this is resistance 2. I'm not taking any trade going down because I know some traders will say, okay, we are at resistance, let us hit it, put stop loss above the structure, which is this top week, and anticipate price to drop. Or this is support 1, this is support 2, where traders will say, okay, because price tapped here and this closed bullish at support, we're anticipating price to do what? Rally. This occur doesn't mean that it occurs all the time. If you check very well, those traders who trade all this support 1, support 2, trade with hope perception, whereby, oh, if I've done this, I just hope this works out. No, you should trade with some level of certainty. At least, even if it's a 51% certainty, is better than being 50-50. I know trading is a probability that is a heads or tail pattern, but you strive to do what? Increase the odds to be in your favor as a trader. Whereby instead of 50%, it should be a fraction above 50%, giving you an edge. So what I'm looking at on British pound Japanese yen is if today close bearish, I'm anticipating if we get a bullish breach above this resistance for price to continue upwards. Whereby today bearish, the next day bullish, we're anticipating the next day after tomorrow for price to continue what? Bullish. Now this is clean traffic above here, which is what I'm anticipating to catch. I will anticipate some reduction in speed, but this is the overall TP here. So this is what I'm looking at. Okay. On the other hand, if price shows me some clear price action to go down, I'm not going to fight it. I will also do what? See how to ride price coming down to this support. So with that being said, I'm not going to touch anything on British pound Japanese yen for just now until I see a cleaner price action. So this is for British pound Japanese yen. The next thing on my watch list is gold. If you look at gold very well, gold has been printing bullish. Okay, the technicality of gold is that whenever gold has an ostrich neck like this or a giraffe neck like this, we need to be very careful. This is what I mean. Gold gave a giraffe neck like this. The next thing gold did after this giraffe neck is a deep retracement to this neckline. Another leg of giraffe neck, deep retracement. Another leg of giraffe neck but failed to make new low. Tried again, failed again to make new low, and did what? Turned upwards. This turned to the next giraffe neck. Okay, it dropped, went up, retarding along this path. Okay, went up, came down to this giraffe neck. So this now became resistance 1 that turned to support, resistance 2 that turned to support, and now we have come above this resistance, which is resistance 3, and price has traveled far above it. So what we are trying to see is, if you look at this very well, you will notice that the buys are getting weak. Okay, because some persons will say this is overextended. You can just use price action to know whether the trade is overextended or not, because what I'm looking at is if we can get a particular retracement to this support for price to continue upwards, or for the bullish momentum to just continue. So this is scenario 1 for the bullish momentum to continue. This is scenario 2 for some retracement to this level before price continues. However, there is a fringe point here, which is price could retrace to this support without bearishly breaching it or taking it out bearishly and continue upwards. This is 1.5. This is between 1 and 2. So this is scenario 1, this is scenario 2, and this is scenario 1.5. Okay, but ultimately I'm anticipating price to rally to this resistance, which is why if you see my target overall is here. So because of the buy position that was entered at a beautiful position, even if we drop and go up again, I don't mind. The only thing that matters to me is that by the end of the day, my swap should not eat into the profit, because this would have stayed for a very, very, very long time. So this is what I'm looking at on gold. Okay, the next thing on my watch list, or the last thing on my watch list, is what? Bitcoin. For Bitcoin, Bitcoin is a very highly speculative market. So what I was looking out for was, if we get a bullish breach above here, we're anticipating what? Continuous rally, which Bitcoin has shown. So the only thing that will show a sweeter or the sweetest rally would be price breaks this resistance, retraces, then we're anticipating what? Continuous rally to this resistance here. But this zone will be a zone of interest. So this is what I'm looking at on Bitcoin. Okay. If you have any question, feel free to ask. Do well, since you've watched to this point, do well to subscribe, hit that notification button, comment, and like. Peeps Collector, thank you very much for watching. Baraka Bashad.